Thank you for joining us at DAT Summit, by the way. It's really so nice to see a full room and so many people here on a Friday just before the Chinese New Year holidays. And after a very hectic week, I think this is my 5th panel with Nenter himself. So I'm sure all of you, we're following each other. So I'm sure everyone's had just a chaotic week as well. But I had to throw in a credibility panel into DAT Summit, being a PR agency after all. And being in the crypto space, we're constantly dealing with crisis, right? So I found this discussion very important to have, and I couldn't have asked for better panelists. Why don't we start off with some quick introductions? Nenter, you go for it.
Sure. My name's Nenter. I'm the global CEO of Bitmart Exchange. We've been around for the past 8 years, global operations, about 2.5 billion daily volume on the spot side, 24 billion on the derivative side. Pleased to be here.
Hello. I'm Joseph Chi, Executive Chairman of Solana Company. Obviously, my name is DAT, by Sol, listed on NASDAQ. We got this thing done on September 18 last year. I guess I have a TradFi background. I've been a banker. I was started off in the US, but since 2000, I've been in Hong Kong. I was the head of investment banking across APAC for UBS for a few years before I retired and started a company, a fund management company, registered with SFC, called Summer Capital. And that was, I think Summer Capital was one of the earliest licensed fund management company that invested in the crypto space and blockchain space. And obviously started with a lot of equity before even start thinking about tokens much later in the process. I guess at some point last year, I was convinced by some of our partners. One of them is actually Pantera, one of the largest crypto funds, a long-standing crypto fund in the US, to start a Solana company. And that's how I got into this. I guess I had a long history of running capital markets, especially this part of the world, a lot of funds and different major banks and major institutions, sovereign funds whatsoever know me because I was the sort of the person running it. And Patrick just now was my right-hand man for a long time before he jumped ship and become an entrepreneur.
Amazing. Thank you for that introduction. Both of you are involved with, well, in crypto, what we would say are legacy companies. You've been in the space for quite a long time, and that means that you've seen a lot and you've been through a lot. We've been through several bear cycles, several, Solana even has endured, the FTX phase and so many crises that came up. How do you define credibility in this market, and what contributes towards it? Is it transparency? Is it liquidity? So curious to hear your thoughts on that.
Sure. Look, I think credibility, I think you have to really think about it from a very holistic view, right? It's sort of the sum of those parts that you had just mentioned. Clear governance, internal controls, having, the sort of, obviously the topic of today's panel is related to the media side, but really, transparency, I think that's sort of a cornerstone. That's something you cannot sort of forego. Media narrative, that's sort of more the amplifier rather than the growth in the growth driver in my view. And the other one you had mentioned related to sort of revenue performance, that's more so a proof of execution. But the two I would tend to focus more on is the transparency and the governance, especially in the financial services field where trust is key.
I'll probably start with this. I think the whole blockchain/crypto sector was all sort of started off with this, the crypto degens and a bit away from mainstream of traditional finance. And frankly, they try very hard to stay away from regulations, stay away from mainstream financial institutions because they're supposed to create something new. Now I think it's sort of like the whole blockchain industry starting last year with the support of Trump administration, it has become the infrastructure for Wall Street. A lot of things are supposed to come on chain. You see a lot of this happening right now. And that's why I think the interaction between the two sides definitely became closer. And then they're supposed to merge. A lot of interesting is happening. And to answer your question, I think it's a complicated one because our starting point is always a bit gray, a bit dark, right? And then most investors, whether institutions or retail or family offices, sovereign, sort of that are this bunch of guys, crooks, right? And that's your starting point. And therefore, you have to manage accordingly, right? To be honest, it's a complicated question. I will take me some time to explain it, but to simplify it, you have to think about, first of all, who's your audience? Who are your shareholders, right? I think managing retail to family offices, to small hedge funds, to large hedge funds, to long funds, to sovereign, and to PE and VCs, and also strategic. Those are different types of investors. You got to manage it accordingly, right? Because and different ways, because you only have 24 hours a day, 7 days a week. You can't be spending time talking all the time. What's the efficient way of dealing with them, right? PR is a very good way to get messages out on what you're trying to do, what you represent, what's the framework of measurement, and what you're accountable for, right? And what's the general direction you're heading to, right? I think different groups of investors here have different expectation. If you go back to retail and the smaller, more speculative investor group, and the first thing they want is transparency, right? They want checks and balances. They want to make sure nothing funny happens. Like you're not doing anything in the background that management or shareholders are ripping off them and the public company. That's important to them because to them this is the opaque thing, and they don't have direct access to you all the time. Right? But the bigger investor will sort of take that more like a given, right? Because first of all, they have access to you, they can reach you, they can talk to you anytime they want, right? And they know you, they have done due diligence on your background, they probably know people around you. So the basic corporate governance structure or standards based on your background, your personality, and your experience, they know. But what they want from you is what are you going to do in a good market? What are you going to do in a down market, right? Defensive or offensive, short-term and long-term, right? There's more expectation management, right? I think obviously they also care about retail support because retail support in the sense that from the major institution, that is your liquidity, that's your sort of like getting your name out there, and then plus depending on what kind of business you're building within the company, because some part of it may have to do with a general, the crypto community. Some may have to do with major financial institutions. Depending on how you manage the media, it makes it easier for you to grow your businesses to care about that, right? But that's how they care about it from the major institute. But they care more about how you run a company, what are the major strategic moves that potentially could create a lot of value for the company. So that's sort of how I see this managing the investor groups.
Joseph, you can really tell that you've come from a TradFi background, now been in crypto for a while. You're thinking about stakeholders. You're thinking about it in a very professional manner. But, crypto has been very degenerate in the way that we communicate. X is everything. Crypto Twitter is crazy. And sometimes, and on to what Nentra was saying, at the end of the day, fundamentals are, fundamentals trump narratives, right? Like you cannot just take out a narrative without any fundamentals because the retailers, institutions, they're getting smarter. They're able to do their own due diligence now. Do you think that crypto today is still very narrative driven? It's too narrative driven. Do you think that we over communicate a little bit on platforms like X?
Okay. Yeah, sure. Look, I think you're right. It's for the most part, at least from the prior cycles, it's very narrative driven, and the cycle keeps on getting shorter and shorter. And when you look at crypto Twitter today, there's a lot less sort of relevant information, and it's really just mostly a lot of influencers spamming, being paid to do so, and it's really become a lot less relevant to get information for retail or if, any sort of market participants alike, which is why these days I tend to see more activity around LinkedIn. And why? Because there's a much better filtering system, and it also sort of goes hand in hand with the convergence of TradFi and Web3/crypto. So I think you're finding more valuable information from LinkedIn as a platform these days, and I'm seeing more KOLs or influencers that tend to focus on that platform. But to answer your question on the narrative side, I think the market has matured to the point where even the crypto degens, right? The ones that may have lost their money from the meme coin cycles, the even sort of shifting over from altcoin trading to prediction markets, they've lost a fairly considerable amount of capital. And it's being reflected in altcoin liquidity. When you look at the LTV for the average prediction market participant, it's only 3 months. That's significantly shorter than if someone decided to trade perps on 100x leverage. It sounds off, but that's the statistics that I'm seeing. And so narratives, you don't really go back from narratives to now understanding, okay, well, there's this thing called revenues, there's other asset classes, right? And you're allowed to trade these on platforms such as decentralized, centralized exchanges. So I think this opens up a whole new world for these degens, so to speak. And I believe that the narratives are going to play a much narrative-driven price action is going to play a smaller role. Not to say that you can't drive temporary price movement on narratives, but I do believe that there's less asymmetrical upside, if you're purely looking at it from a narrative perspective in the secondary market.
I guess I give you simple answers is yes. At this point in time, I would think that narratives still have a relatively larger voice than, I don't know, traditional finance way of looking at things. The current market, where the prices of cryptos are, is a reflection of that. Because if this is up to traditional Wall Street kind of way of measuring cryptos, especially L1s, and looking at how they perform, everything else, the crypto should not be down as much, right? And this, to be honest, I'm also learning along the process, right? Because I know that this investment in crypto is driven by quote unquote community, faith, all the discussion with the crypto people. And they believe in this. Now we have a lot of our old friends here. We debate about this all the time. Hi. Why should there be a 4-year cycle? Every time there's a 4-year cycle, what caused this 4-year crash to happen was a completely different set of events. This time around it's the same, but again, it happened again. It's self-fulfilling prophecy because everyone believed that it should happen, and then people stop buying, being cautious, some OGs selling, and then people come with all sorts of ideas. Oh, now they're selling to buy real estate, to buy AI, to buy invest in everywhere else, which is also partially true because now that in the past, there's never a time where these large owners of crypto actually can have their account open and convert the asset into fiat and move everything into the traditional world as before. That's happening. But the other side of things is happening also. The institutions are coming in. And if you look at the flow in the last few months, that they've been buying consistent. The biggest buyer are the institutions from New York, from elsewhere, those who actually have conviction in this sector, right? But because of this narrative that has to be a bear market, and we are where we are, right? So that's sort of a proof for narrative is still important for the time being. There's not enough institutional ownership across crypto to drive it based on fundamentals, based on long-term potential. I think that's happening. I think a lot of us here came from digital finance. Mr. Cahill is here. Hopefully at some point, I think this whole sector will be sort of measured more based on fundamentals, long-term potential, rather than short-term narrative. And as you would expect, if you go on community chat, X, tweet, whatever, chat they're using, Kakao Talk, whatsoever, generally people are just like expressing their emotion. And the market's bad, and obviously a lot of this feedback here, I'm not sure how much of it is actually useful to you as a listed company. And I guess they're also very impatient. They're very short-term focused. And then they always say, okay, what are you going to do about this? Some people might even say, hey, look at your stock. It trades a few $1 million a day. Why don't you go and buy the stock up, move the share price up for all of us? But that's sort of like, the kind of comment you get is not very useful for a listed company. But you have to respect that, because that's still the majority of the buying power, sort of driving sentiment, the sentiment in the sector. But on the flip side, I guess over time, I would hope that rational thinking, fundamental way of looking at this. I mean, as you have more research analysts covering the sector, more numbers are available. Major financial firms having proper global coverage in terms of sales, trading, everything else on this sector for a listed company, and over time also maybe have sectoral coverage on the major cryptos. As you get more and more of the institution to be involved, whether on the stock side or on the crypto side, right? But I guess the crypto, because the DAT is a complicated business model. If the underlying is not working, it doesn't matter how much work you're doing at the top, the share price is not going to perform well, right? There's not much I can do about it. And I mean, we talk about media and coverage and everything else. At this time of the cycle or this part of the market, it doesn't matter how much you do in PR, it's not going to help the share price because the underlying is not working, right? But I guess there's different timing. As you will see, this bottom out in a way. I'm as in TradFi person, I'm learning very carefully how to feel out where the market is, where's the community. At some point, when it turns, I want to know when that is, and then I can start reacting to it and start managing how much investment I put into PR, how much investment I put into fundraising, and what I'm going to tell my institutional shareholder base on the listed company side.
Yeah, you said one thing that's absolutely right. I mean, there's no two ways about it. There's definitely more institutions coming into the space. The space is becoming more institutionalized, and even our last panel touched base on a lot of the institutionalization that's taking place. What that means is more regulation, and what that means is that we need to change the way we communicate to the media. Even as a PR agency, our communication style has completely changed. There are things that we advise our clients they should not be saying. You cannot be speculative. And we've even seen this pivot in their preference of media outlets. Like you said, you touched base, Joseph, on the research outlets that people are getting out on. People want more credible outlets. They want the CNBCs, the Fortunes, the Wall Street Journals to cover them more than the crypto media to cover them. What do you think needs to change in the way we communicate now that we're becoming more institutional?
Well, I guess from the perspective of a centralized exchange, it doesn't apply just to the centralized exchanges, but I think transparency is pretty key, especially when you're looking at whether or not it's proof of reserves or sort of liabilities and such. These are sort of metrics that any retail or institutional investor alike would want more clarity around, especially now when you're looking at spot fees trending to zero, right? Every exchange is looking towards that Robinhood model, which is how do you increase your AUM? And in order to attract those deposits into your earned products, you need trust. It doesn't matter what the size of the underlying users' deposits are. It could be large or small, but you need to trust the institution behind it. You need to make sure that there's it's well capitalized, sufficiently capitalized, and that's sort of the only way you can grow the business moving forward. So for us, that's something that we're very focused on: full transparency, being proactive. Even if there's some potential negative news, you have to address it through public AMAs. You have to make sure the communities are, fully aware that from the leadership level down, that you can, you're comfortable communicating this and really turning a potentially catastrophic event into a trust-building moment.
I agree with everything Nathan said, and I'll add on to that. Right, I guess as more and more institutions coming into the sector, I guess that means the crypto sector. But for for us as a DAT, and most of our shareholders are institutions, right? It's already, we are dealing with it already, right? And at this point in time, I guess the way you would sort of manage the communication to them, especially to the institutions, is that other than what Nathan said, is that you have to be very disciplined, very clear about what you promise them and what you're doing in executing those, right? Because in the up market, everything's doing well, everyone's making money. They are not as focused. Now in the down market, people are very, very focused on how are you controlling costs? Are you still continuing to execute, right? What if the worst happened? Let's say Bitcoin drops to 30 and the rest of crypto crash with it. How are you going to manage it? They're very worried about downside. Can you survive? Do you have too much debt, right? Do you have any funny things that we are not aware of, right? Are you hiring the right people? Are you cutting costs or laying off people that should not be there, right? Do you have the right people on the board to make sure they have good checks and balances, right? And then you have people now going to get into do you have the right auditors, right? It's a bit of downside protection. People are sort of checking, make sure that things are fine. And you have to proactively reach out, especially to your institutional shareholders here, so that they feel comfortable, because most of the institutions are actually patient, right? And they know whatever's happening right now is not caused by you. There's not much you can do to drive the market up or down. But you got to get them comfortable that you're not going to blow up. And then when the market comes back, you're going to be there. And you're going to, during this time around, like what a lot of panelists said, it's time to build. You'll maximize the upside when it goes up, right? So that's what they're expecting from you. That's why you have to communicate proactively, right? And it's a bit like what we trying to do. I mean, for example, we believe investors invest in DAT. They are looking for capital gains. I mean, for the longest period of time after this DAT formed, a lot of people are talking about all sort of yield enhancement strategy. And frankly, most of the investors here are not looking for yield. They want to look for yield. They go for fixed income instruments. They go invest in REIT, right? But now yields, we are also starting to focus on yield because it looks like it's going to be a prolonged down cycle for a while. It'll be a while before it starts going up aggressively. And it becomes a survival issue, and maximizing return on your asset issue. Having consistent cash flow issue is more a risk concern rather than you're turning yourself from a growth stock to a yield stock, right? You want to turn yourself to a yield stock, you should fire most of the people and then pay out 90%, 95% of your staking yield and whatever you generate in terms of yield, and then turn yourself into a REIT. But at the moment, you're still a growth stock to them. They're looking for capital gains. But right now, it's more like just protecting downside. So we put in place, like a tripartite arrangement with Camino, with Anchorage, because I think both the sponsor of our DAT, we are, the bad thing is we may not be as crypto native, and we're probably not going to. We didn't jump right into all sort of different DeFi protocols, different protocols that will make a lot of yield in the first 3-4 months of operation. We are very worried about our lawyers and auditors and regulators don't agree with some of the things that we invest in, and we don't know the tax implication of it, and we don't know how the auditor is going to include them. But we now also we just put in place a tripartite arrangement where we have all sold with us. We're still getting the yield in our custody, is not leaving our custody. And then we still we could generate the kind of DeFi lending protocol return with Camino, and everything's transparent, everyone can see it, and not taking the counterparty risk, not taking the commingling risks with the wrong kind of funds, but we're still delivering what we should deliver to our shareholders. So in a way, what I'm saying is, we have to see a bit of where the market is, what the investors are looking for, and then you have to adjust a bit what you have to do in the short term and readjust your prioritization of what you're going to deliver in the future. So we are doing a few more things that are going to enhance cash flow, just to make sure that people feel comfortable that we'll be around, right? And when the market comes back, we'll be there to capture the upside.
Joseph, you mentioned some very good aspects of what people, what stakeholders would look for that define credibility. But one thing that perhaps you didn't touch base on, we didn't touch base on, was the founder's profile, executive positioning. If you look at companies like Strategy and you see how Michael Saylor is a fantastic ambassador for Strategy, right? Like he's outspoken. He'll go on the news and he'll talk about whatever he gets asked. It seems like he's quite fearless. He's transparent. Yet in crypto, you still have some anonymous founders. So how important is executive positioning?
Well, I think it's very important, actually. When you look at some of the most successful crypto companies today, I mean, my former boss Yacht is sitting there, and I think he's a perfect example, right? Where
Tom Lee of Hong Kong.
Yeah, exactly. I think Yacht. I think just looking at Yacht's example, where sort of his vision is reflected through him being very public, showing sort of what Animoca's key strategic vision and path is. And I think that's sort of the right methodology when it comes to not just Web3, but I think just for companies today, right? You could be a publicly listed company or a private exchange. It doesn't matter. It comes from the leadership. And I think leadership, visibility, transparency, and trust sort of trickles down to the rest of the organization.
Yeah, Yat's done an incredible job at building his profile, and I think it brings a lot of credibility to the brand as well as Animoca.
This is the soft side of things. Obviously, when you talk about listed company like DAT, people go back to disclosure, governance structure, financials and things like that. I think, and I think like John and I, we've been in TradFi for a long time. When you invest in a company or we're going to buy the stocks of public companies, you also will look at who is the leader, who is managing it. Is he strategic, right? Is he trustworthy? During tough times, does he have a good track record of making the right decisions, right? And having this, the right leader leading the firm is an important one. But you cannot discount that a good leader for a public company need to have a system in place to make sure that's proper checks and balances and also have proper advice and also help, whether it's from the board, advisory boards, or friends and partners, or strong managers around them. It can't be a one-man show, right? That I think it has to be looked at in totality. Right? I think like ever since I started building this DAT thing, and I have shareholders and partners, we keep looking for the next Tom Lee, right? And then every firm is looking for the next Tom Lee. And I guess Tom Lee is Tom Lee because he showed up at that point in time, evangelized, Ethereum that which has been pretty dead for like 2 years, made like build a $10 million company out of it, and it's amazing, right? But I don't think you're going to find another Tom Lee in the short term because you need quite a few things. Chinese said, 天时地利人和 means the timing, the location, the people all had to be aligned, all start aligning the way for this great, Tom Lee to emerge. But I guess there will be a lot more credible, respected leaders for crypto companies over time, because I think there are a lot of people that are doing the right thing over time, over and over and again, right? And I think the track record they built over time will give them credibility in the market. And you just have to believe that you have to do the right things as a leader. You're not only doing the right thing for the shareholders, you're doing the right thing for your employees, for your board members, for everyone, right? Being this fearless leader is actually not an easy thing.
Yeah, that's a very nice way to put it. I think on top of being the right leader, you have to be at the right place at the right time as well. Thank you so much, you guys, for your insight. That's the conclusion of our panel, and I hope everyone enjoyed it.
Thank you very much.
Thank you.